Hey folks, CA Rachana Ranade here. I'm sure everyone has witnessed the euphoric rally in gold and silver over the last few months. But what has happened over the last 1 week is something which is absolutely Bollywood style, right? We saw massive correction in silver and a lot of correction in gold as well. So those who had bought gold or silver at like the topmost point or at least near the highest point, they are in a panic that should they sell that off and book losses, or at least some people would want to know that where could be a good support. So what are we going to do in today's video is, number one, we are going to analyze the euphoric rallies that gold has seen in the past, and we are also going to analyze that after such euphoric rallies, what has been the support or what has been the low in the next 30 days post the rally. Okay, same thing we're going to check for silver, the euphoric rise in silver prices versus what had happened to that after 30 days. And extremely important point is that many people want to know the answer to this question, that okay, we should have 10% of our portfolio parked in commodities, something like gold and silver, but then what should be the split out of that 10%? How much should go for silver and how much should go for gold? So video is extremely informative. Keep on watching the video till the end. Before we move on, if you can dedicate just one weekend to upgrade your skills, I highly recommend this 2-day free AI training by Outskill, who is the partner for today's video and also the world's first AI focused education platform backed by top AI founders and investors. It's a live 16 hours program happening this Saturday and Sunday from 10 a.m. to 7 p.m. And though it's valued at 10,000, you will get it absolutely free because you are a part of our community. In this 16-hour live interactive training session, you will learn things like prompt engineering, no code data analysis, and a lot more. Plus, you will learn how to build your own personal AI toolkit using 10 plus cutting edge tools that are transforming industries, automate repetitive tasks, and analyze data without writing any code, develop AI agents and tools that give you a strong competitive edge. Over 1 lakh professionals from 40 plus countries, including those in tech, sales, marketing, HR, and business, have already joined this workshop. I'm getting my entire team to attend this, and you should too. Seats are filling fast. Use the link in the description to book your spot. Join the WhatsApp group for updates, and don't miss the 10 a.m. live session this Saturday. Now, what are we going to do? If I were to understand what could be a good support level over this 30 days, where since we hit the all-time high in gold, what could be the level at which gold can possibly see a support is what we are going to try and calculate. But for that, what we are going to do, we are going to try and analyze what has happened in the past. What data points will we check? We'll check the swing low, we'll check the swing high, we'll check how much percentage rally did we see, correct? Post the topmost point, we are going to check how much was the fall over the next 30 days. Okay, we are going to try and calculate the percentage fall, and extremely important, from the lowest point to the highest point, around what Fibonacci retracement did gold take support in the past. Okay, simple till here. Okay, now let's calculate one by one. For the first 1 or 2 points, I'll go extremely slow. Then once you understand this, you should be able to grasp it at a faster pace. Okay, we are going to talk about the very first rally that we had seen, 1976 August to Jan 1980. We can see $100 per ounce was the swing low. Achha, by the way, this is as per data available. I'm not sure if we had seen a rally in 1900 and all that. Okay, so 1976 to 1980, swing low $100, swing high $875. With that, what was the percentage rally? 775%. Now, post reaching 875, we have to understand over the next 30 days, to what level did gold come down to? 600.5. Now we'll understand how much is the crash percentage wise. Crash was 31.3%. And now if I were to calculate, this is the swing low, this is the swing high. If I were to draw a Fibonacci, near which level has it taken a Fibonacci support? This is not the exact one, but near which level has the support been taken? Answer is 38.2% retracement level. Simple. I hope you have understood this. If you have understood this, I'm going to go a slight faster now. Now, if you can see how much is the swing. So next rally is Feb 2001 to May 2006. Okay. Swing low 254. Swing high 730. Percentage rally 187%. Fantastic. Now we'll calculate how much did it fall in next 30 days. To 543. How much was the percentage crash? 25.6%. Nearest Fib support 38.2%. Okay. So basically in the first two instances, we have understood that It has not gone below the 38.2% support, fib support. It may have touched it, it may have retraced just before going to 38.2% also possible, but not below 38.2 retracement. Now I'm just going to quickly go through the data for 2008 to 2011. 681 swing low, swing high 1921. You can see the percentage rally. Next low from 1921 to 1595. This crash was around 17%. Nearest fib level again same 38.2. August 18 to August 20. You can see the swing low, you can see the swing high, percentage rally. Next low over the 30 days, and you can also see the percentage crash. What was the nearest fib level? It was 23.6. Now let's understand what is happening right now. Swing low 1616. By the way, this rally is from November 22 to Jan 26. Okay. Swing low, swing high, percentage rally. Lowest low over the next 30 days is 4402 that we have seen right now. Okay. How much was the percentage crash? 21%. And which is the nearest fib support? 23.6%. Basically, I'm saying it's closer to that. Has it gone below 38.2? It has not gone to below 38.2 in any of these circumstances. It has not closed below 38.2 in any of the circumstances. So can I say gold historically has seen not more than 38.2% retracement? Answer is yes. So based on this, I hope you have understood that currently we may say that this could be a good enough support level. But if you were to calculate this swing low and this swing high, if you were to take these 2 points, you have to tell me in the comment section what is the 38.2% retracement level for gold in the current scenario. Well, now that we have understood the whole analysis for gold, now let's move on to silver. Are we going to use the same parameters to analyze silver? Yes, the numbers are going to change. That's it, right? Which parameters did we use? We tried to check what is the swing low. We calculated the swing high. We calculated the percentage rally. We calculated how much was the fall over the next 30 days from the top till the lowest point in the 30 days. We calculated how much was the percentage fall. And ultimately, we checked the Fibonacci retracement as well, right? You already know this. So let's quickly jump on to silver. First rally period 1976 Jan to 1980. This was the swing low that we had seen. Peak high, swing high was 48. Percentage rally 1159.8%. Lowest low in next 30 days was 31. So from 48 it went down to 31. This percentage crash is around 35%. Retracement 38.2%. Well, again I'm repeating, this is the nearest retracement. So there is a possibility that it retraced from around 30%, maybe around 27% or whatever. Okay, nearest retracement is 38%. Next, let's talk about October 2008 to April 2011. 8.45 was the swing low, high 49.8. Percentage rally almost 500, 489%. Lowest low 32.33. Percentage crash again almost 35% crash. Fibonacci retracement level 38.2, right? What about 2020? This was a massive and a super quick rally. 11.6 swing low, 29 swing high. See, why did I say massive? You may say that, Rachana, this is barely 2.5 times. From what to what? March 20 to August 20. This is not even 6 months. More than 2.5 times. Almost 156% rally in barely 5 months. That's why I said massive. Lowest low over next 30 days, 21.6. Percentage crash, 27% roughly. And Fibonacci retracement around 50%. What about the current scenario? Low, 11.56. High, 121.64. Percentage rally. Look at this, 592.7%. Lowest low over next 30 days, 71. Percentage crash, 41%. And we have seen what had happened over the 2 days or a 3 days period. It was crazy, right? Fibonacci retracement again closer to 50%. So what am I trying to tell you? Like gold has never gone and closed below 38.2 retracement level, silver, whatever rallies we have seen in the past, silver has never gone below and closed below the 50% retracement level. So I want you all to calculate the swing low and swing high. Basically this swing low, you have to compute the Fibonacci from to what? To 121.64. And if it were to go and close near the support at 50%, what would that exact level be? I want you all to tell me in the comment section below. Now let's answer the most important question, that which many people have asked me, that if we were to have a 10% allocation for gold and silver in our entire portfolio, what could be the split for gold and silver? Okay, of course, final decision is yours. I'm just going to tell you based on data what could be your thought process. Okay, ultimate decision is yours. Okay, first thing first, we'll try and understand how gold has behaved and how silver has behaved. So if I were to understand the volatility, we have seen all the data points. Which was more volatile? Was it gold or silver? Give me the answer. Yes, it was silver. Absolutely. Volatility for gold is somewhere low to moderate, and for silver, it is definitely on a higher side. So high, I can say. In that case, if I were to understand the drawdowns, means how much percentage falls have we seen? Because we are saying it is volatile, we have to understand how much were the percentage falls. Typically, gold has fallen from around 10% to roughly 30% from its peaks, whereas silver has fallen down. The drawdown has been around 25% to 45%. So I hope you have understood the point for volatility and drawdown. Now, based on this, what can I say? What could be the role of both these commodities? See, if I were to understand for gold, it's more of wealth preservation kind of a thing, as a hedge for inflation and all these things. Typically, inverse relation to stocks, all these things will be applicable for gold. Silver, I can say this is like high risk, high return thing. So that can be used for growth or momentum. So wrong way to compare, but let me just tell you for a thought process. I may say gold is something like a large cap. It will not see a lot of drawdowns, but silver is like kind of a small cap comparison where you can see fast rallies, you can also see fast crashes. So with this in your mind, let us understand three types of investors and what could be the percentage allocation. So if I'm talking about a conservative investor, ideally you should not have more than 1 or 2% of silver, and balance 8 to 9% should be in gold. Okay, and that is also, my basic assumption is they want some exposure to silver. That's why I'm saying 1 to 2%. If it's a super conservative investor, he may say I want zero silver. That's okay, no worries. Okay, balanced investor, which can be like most common thing, still I will say 6 to 7% gold and around 3 to 4% silver. Okay, and if I'm talking about aggressive investor, then I may say okay, 2 to 3% gold and around 7 to 8% it could be silver. Okay, I hope you have understood whatever I wanted to discuss in the video. I hope you liked the video as well. If you did, please don't forget to smash the like button. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.